So Quentin, let's suppose that you come into a small inheritance and you've decided that you'd like to have it exposed to the stock market. What would you do now? Now you're more or less retired. I know you work a little bit, but what would you do with the money you've received in terms of stock market? How would you start? Would you do some research? What would be your approach?
Oh, sure. I mean, I would definitely. Well, first of all, I'm kind of I mean, I'm a little. I'm 60. I'll be 67 this year, so I'm a little bit older as well. I guess I'd. Well, I mean, I'm conservative at this point because I'm a little bit older, and so yeah, I would do a lot of research. But I would take the money and probably park it in. I mean, right now you can get pretty good interest rates just on actually 3 month treasury notes or whatever. So I'd park it in there or park it into a money market fund or something like that. Take my 4.5%, 4 point whatever, and then I would do my research and I would. I mean, I take a look at the companies that I currently own, and then I branch out. I've got a watch list somewhere here, and I would, start to look at those companies that I'm watching, and hopefully pick up other companies. I'd go through and analyze. I mean, I think about markets that I think are opening up. I mean, you made a video on AI, and that's obviously a thing that I would think about, like, oh, how is AI? And I watch your video, and I'd take those insights as well. But yeah, so I do research. I'd look at companies. I'm a value investor, so I want to. I mean, my idea or speculation would be that I would look at, as I said before, I'd look at a company right now and not imagine, but I try to understand what they're going to do, let's say with AI in the future. And my speculation would be that I wouldn't necessarily pick, in the speculation, I wouldn't necessarily pick huge companies, but mid-sized companies. And I'd come up with a list, and when I see their prices go down, and for no bad reason, but for some economic reason or some, whatever group, things go out of favor instantly sometimes because of geopolitical events or what have you. And I have a certain position size. I tend to either buy a position size or I like your idea to think about buying a third and a third and a third. But I have a position size, and if I feel a little uncomfortable, I buy a half a position, and otherwise I buy a certain position size, and I walk my way in slowly. I'm not a guy that's going to take, a big bet. Like, oh boy, I'm going to put everything on red. It's not the way I work. So, yeah, yeah. I
So
mean,
just to explain to all the viewers what the one third, one third, one third tactic, which I described is.
right.
This is after investing money for 18 years. I described how every time I bought something, it seemed to miraculously go down, and when I sold it, would miraculously go up. And I thought I'm doing something wrong, and I solved the problem by only buy one third of the position. Now the result of that was, if it would go up, I was nowhere near as trigger happy to sell it. If I'd bought a full position, it goes up 20%. I think, oh, I got 20%. I can get a lot of money. But if you only bought a third of the position, it goes up 20%. It's not worth the biscuit. And you leave it and let it run. And then you look at it, it's up 50%. It's still not worth taking the profit. Then you look at it, it's up 100%. And so pretty soon, you've got your full position by buying a third position. Or if the stock goes down after I bought it, which was all too common, and to be honest with you, it's still all too common, but at least I've only bought a third, and then I
Right.
can come back and have another look and say, why did it go down? Was it bad news, or was it bad timing? And
Right.
if it's just me who's doing bad timing, there's no bad news, and it's still a great company, well, I can buy the next one third at a lower
Yeah.
price. And I've still
Mhm.
got some powder dry for the last one. So that's how the technique works.
Mhm.
And the other side of the coin, which I didn't mention in my video, the other technique which I could advise on is when it comes time to sell something, the urge is to sell the entire position because the
Mhm.
profit is big enough and you want it. I discourage everybody from selling their entire position because
Mhm.
if you sell your winners, sooner or later, all you'll have left is a portfolio of losers.
Yeah. You
Now,
mentioned that.
there's a psychological factor here. You're going to feel mentally a lot better if you still have lots of winners in your portfolio. So, by all means, when you've got a winning stock, top slice it, sell a bit, take some money
Right,
off the table,
right,
but
right,
keep some of your position so that you can keep looking at it. You can show your wife, your family, your banker, your friends. Look how many profitable positions they got.
right. Yeah, no,
And
that's great.
if you have a losing position, be sure to get rid of it before you show anybody.
Right. No, that's great too. I mean, I tend to only, I mean, I shouldn't say, I tend to only sell things when something goes wrong with my thesis on why it's a good company, or all of a sudden, I don't know, AI is going to come along and take away a particular industry. I mean, I don't know, but when something goes wrong and I'm like, oh, I don't like that. A company is supposed to have a medical application in for a patent or something, and I, oh, that's going to be a really great thing, and something happens and it's not, our competitor comes out and does the same thing, and I'm like, oh, that's not really working out the way it was. And the company doesn't have to go down in price, but a lot of times the company will go down in price because everybody was thinking like me. And I do sell everything at that point. But that's only because my thesis stopped working. But in general, if companies go up, I guess I do. There have been a couple of times where I've taken all my investment money off the table and let the rest ride, and it feels like a free ride at that point. But in general, I'm interested in the dividend, so I tend to not do that. That happens mostly, that kind of manipulation stuff of my portfolio happens mostly when I don't sell and buy that often, but it happens when, like I said, something goes out of kilter with my thinking, and it's just not working, and I make mistakes. I make assumptions. I think something's going to happen, and something doesn't happen, or something different happens, and then so that's yeah. So, but in general, I'm a dividend investor, and so I tend to stick with things because and honestly, I don't.
I'm like
No,
you,
I
dividend
don't
investor.
have a. I'm sorry. Go ahead.
I was just saying, I agree with you. At a certain age, like our age, you want to
Right.
be a dividend investor. It's what we eat.
Right. Although I got to say, I have a, I do have a fair amount of the portfolio that I take care of, which is about half. Um, I say uninvested, but really it's in short-term paper and money markets and stuff like that. So I think of it as the money that I'm going to use, and and I have my dividends flow into that. I think of it as the money that I'm going to use to buy the great bargains, and when they come up in the future. Well, when crashes happen, I don't mean huge crashes, but when dips happen, so what I generally do is I have a watch list. Although I don't think I have any limit orders set up right this second. I know I might have one, but I have a watch list, and I look at the company, and I'm not a technical trader, but I look at the stock price over time, and I pick points where there's support and resistance, and I say, okay, yeah, look at that. It really has a lot of support at this area, and it's significantly lower. I don't mean like 50%, but it's some percentage lower from where it is now, and it might be trending up, so that might be a bad point to pick. But I'll say I would love to own it at that price because it's really a good price to buy it, and I'll just set a limit order and I'll let it run for months, or sometimes good until cancel a lot of times. And if we have a crash, and this has happened more than once, if we have a downturn for a day or whatever, some disturbance in the field, the market, so whatever that Star Wars thing is, force, then then all of a sudden it'll hit, and I'll be like, great, now I own, I don't know, I can't think of the last company, now I own Exxon for a great price. You know what I mean? I really wanted to buy it. So that's the other thing that I do is with my watch list is, I keep track of it and put in these, and as the price continues to go up, I'll systematically go in and move my, at times I'll move my limit order up also, because it's stupid to sit there and a price that you'll never get again. So, yeah.
there's a lot to be said for having a few low limits sitting, just waiting and waiting and waiting, and knowing perhaps they'll never get hit. Um, some people will remember a few years ago, I can't remember what it was now, we had what's called a flash crash.
Right,
This is
right,
when the stock market, for no reason at all, nobody ever understood, it's never been explained, within a few seconds crashed, and we had stocks like Accenture dropping to the price of 1 penny.
right,
We had big names like Procter and Gamble trading for a few cents on the dollar. Where the price should be hundreds of dollars. Nobody knows what happened or why it happened, but a lot of people, no, I won't say a lot of people, some people managed
right,
to have these low limits and pick up stocks at ridiculously low prices, which immediately, within seconds, rebounded to back where they'd been. And
right,
what was it? Was it an algorithmic error by a computer trader? We don't know. We never really
right.
found out what happened behind it.
Yeah, I mean, I don't bank on that to happen, but I do bank on the fact that we have sometimes significant volatility just short term in the day, and I'd love to have a company at that price, and I'll just put in an order. And sometimes, actually, most of my stocks that I bought that way. Believe it or not, I'm a majority.
Well,
Very few.
we
I
only
haven't
have to
bought
look at what happened. Look at what happened a few weeks ago, 4 weeks ago, when the tariffs were brought in or announced. Stocks plunged by nearly 20%, and
right,
here we are again, almost at an all-time high.
right, right. Yeah, no, that's right. That's exactly it. And it can be an attack in the war that's was significantly different than was that then happened for the last couple of years. It could be, I don't know, somebody punches Elon Musk in the eye. I mean, I don't know. You know what I mean? There's just all kinds of reasons that people get excited and unhappy and scared and what have you. And yeah, so I should probably have more like limit orders sitting there waiting to hit for that reason. I don't. I mean, it isn't like my strategy. My strategy is to try to get stocks at a good price, and sometimes I don't. Sometimes I'm not sure which. I mean, I want to make sure the company's solid and good, and you know what I mean. So I guess I have a watch list, but I haven't done that as of late.